Welcome to summer of 2024 in Bay Area real estate, and it has been a wild ride, but I am here today to break it down for you. We're going to start with rewinding a little bit and talking about the past few years and what we saw, and it was nothing short of a roller coaster. But first, we saw the pandemic hit, massive pause. Then when the gates reopened, we saw a rush of home buying and prices going up. And then interest rates shooting up like fireworks on the 4th of July and doubling local inventory in just 6 months, causing pending sales to plummet by about 40%. So what has happened since then, and specifically what has happened in 2024 in Silicon Valley real estate? We're going to dive into the numbers today. So single family homes, current inventory is standing at about 1,096 homes with 807 pending. That's a 74% absorption rate. So 3 out of every 4 houses in the single family home sector is selling. Trends, inventory is up 47% since March. Number of sales is up 9%. Let's compare that to last May. Inventory is up 22%, and we have a healthy absorption rate of 74%. Still a seller's market, guys. Now, condos and townhomes, different story. Current inventory, 623 condos or townhomes on the market, 363 pending sales. That's a 58% absorption rate. Remember, single families was at 74%. So condos, significantly lower. The trend inventory is up 51% since March, and the number of sales is virtually unchanged. Completely different animal in condos and townhomes. Let's compare that to May of last year, where inventory is up a whopping 83%, while the absorption rate has dropped from 88% back then to 58% right now. It's a whole different ballgame. So market dynamics. Single family homes still hot, hot, hot. Think lemonade stand on a scorching summer day. Condos and townhomes cooling down pretty fast. Buyers, both investors and first-time home buyers, who are usually the people who buy condos and townhomes, they're taking their sweet time. So some key factors are interest rates, supply and demand, and the job sector. We talk about supply and demand all the time. We're eternally high demand and eternally low supply here in Silicon Valley. But specifically right now, interest rates in the job sector have had a pretty big effect on buyer mentality. Higher rates and the talk of layoffs make first-time home buyers a little bit more wary, and the investors, they're just more patient and they're not willing to compete for a property. So looking ahead, I know there's a lot of talk of interest rate cuts. Some of our trusted lending partners have said that we might see rate cuts in the next 3 months, potentially triggering a buyer stampede, but we don't know. So it's especially important to make sure that you are comfortable in the mortgage payment that you get right now, because in the case that they do not come down significantly enough to refinance, you want to make sure that you're comfortable with your monthly payment. Switching gears to the job market, AI-based companies are thriving. They're keeping the local economy robust. Really, the tech garden seems to be in full bloom. So the advice corner, buyers, jump in now before any potential rate cuts cause a buyer stampede, and sellers, make your property shine, especially if it's a condo or townhome, guys. I'm happy to advise on the best places to put your money into your property to make sure you get the best return on your investment when you do decide to sell. Some final thoughts. You guys, the real estate market has always had its ups and downs, and it still will into the future, but long-term trends here show significant value growth. The Bay Area seems volatile, but remember, a 5% swing here seems like a lot bigger number amount when you talk about a $1.5 million home versus a 5% swing on a market where houses cost $200,000 and $300,000. So remember, it's all relative. That's all for today. I want to hear your thoughts on the Silicon Valley and Bay Area real estate market in the comments below, and I will see you guys next week.